The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien.
Hi, everyone. Basil Chapman sitting in for Tom O'Brien. My pleasure to be here this 17th day of August. And let's look at the numbers. We've got the Dow down 89, coming back a little bit at 17,387. The S&P is down 8 at 2,083. The comp index is down 14 at 5,033. The VIX index jumped. It's at 14.12 right now, up 1.29. But we'll see how long that's going to last. And we've got the E-mini, as you can see right here, down 10.75 at 2078. Repelled yet again at that dashed line. Yeah, it's so interesting to me. I always do my show, the 11 o'clock till noon show. That's called the Tiger Technicians Hour. And so let me just show a couple of things that I use, the technical tools that I use. I love to draw trend lines in. I draw the trend lines in from this one now is gone. I don't need it anymore. And then I just get rid of it. And this one here with the tops of all the bars that were made from 2126.25, that was back on the 20th of July in the E-minis, September E-minis. And you've got a dashed line that goes to the high of the 5th of August at 2107, round number. The next one is at 2107. I just did that, right? Yeah. So the next one is at 2101.75, the high of the 11th of August. And then today's high of 2094.50. And it hit it exactly and it pulled back very sharply, in fact. Now look at it. The S&P is down 975. I just drew this in right now. Let me show you what I'm doing here. For those of you intraday trading, what you need to see, this is the 10-minute E-minis using the Chapman wave methodology. I haven't got the notations in right here. But what I wanted to show is, in this particular chart, you see this mauve, this kind of purple line right there, that's the 9-period exponential moving average. You see that little circle I drew there? That's in the 2082 area. That's 3 points higher. My suspicion is that if the E-mini in the next 10 minutes to 20 minutes is able to hold that line for the first time, actually the first time in quite a while, the first time since it broke down back at 20 to 8 this morning, that would be a very big positive and allow it to at least test that moving average there, that little green line. And once it breaks that, whoop, we should have a hit. The difficulty is going to break above 2084, the 200-period exponential moving average. Now, all you need to do for a failure is to take out it's at 2079.75. You take out 2077.75 in the next 3 minutes or so. And that strength that's starting to build with a little bit of a positive divergence between the stochastic and the lower price, higher stochastic and lower price, and the MACD histogram, those little vertical red lines starting to move up, all of a sudden that's going to be negated. Let's get out of this and we go on with our story. I'll do these charts. You've got the left side chart here, the daily. The middle chart is the weekly. Look at this middle chart here. It's suggesting that arch formation, just a beautiful arch formation going all the way to the 2126 high from the 1815 low way back in the 17th of October. And here we are, wait a minute, 17th of October, of 2014. A little confusion there, huh? And look, starting that arch formation, which suggests that we're going to start making lower highs and lower lows in the weekly chart. Let me go on here. I wanted to show something. In the Dow Daily, INDU, and this is what I show my subscribers every day. See, here's the Dow Daily, but I really go through this. And this is with the Chapman wave notation, and it's a real simple technique. What you do is you look for the lowest low bar and immediately start your wave count to the upside by counting each successively higher peak, peak A, then B, C, D. When you get to D, other things can happen. Here I went to an E and then pull back. So let me run the numbers quickly because I'd like to go to our callers, and here we go. So the Dow's down, now it's down 80 at 17,397. S&P's down 7 at 2,084. The VIX is at 1409, up $1.26. The comp index is down 15 at 5,032. This is going to get interesting. Why? Because you've got, let me just move this away a little. You've got gold up a little at up 570 at 1118.40. High-grade copper it's just stuck. It's at 2.5. It's not acting very well. Silver is up 0.07 at 1529. Bonds are up almost a point at 159. And you've got the dollar up 21 cents at 96.73. I think I forgot crude oil. Crude oil is in there somewhere. Oops, I lost crude oil. Let me just put it in here. Crude oil, I'll make that crude oil, CL. What happened? Yeah, CL. Crude oil is down 55 cents at 41.95. What a terrible looking chart. All right, so we've got some of that out the way, and I just want to do the TLT, which is up 66 at 124.62. Let's go to Victor in Paramus, New Jersey. Victor, how are you?
Good. How you doing? For FCX, we got into $10. Is it a buy? I heard somebody saying it's going to go to $7.84. And do you think they'll cut the dividend? And somebody told me it's based on the Aussie dollar. And also check out BP. What do you think of BP? So.
Okay, so a couple of things. First of all, FCX is just flattening out now. Let me do this one at a time. So the 120-minute chart of Freeport-McMoRan, this is oil and copper. Yeah, I think it's oil and copper. It's trading at $10.09, up 6 cents. You see the flat chart that I'm showing right here with the 120-minute chart? Now, one of the things we had looked at before when I was looking at it on air, way back in the late July, is I said there's a rectangle formation forming, and if that rectangle formation takes out the bottom part of it, that'll not be very good, because what you really want to see is a move to the upside into the 12.5, 13 area. Well, it took out the downside decisively. Now it's trading at 10. So I'm going to do it short. You're in it at about $10, correct?
No, I'm looking to get into it. I was wondering if I should.
Oh, you're looking.
First.
Okay, so that's good. I prefer you're just looking right now, and I'll explain why. I would much prefer to miss trying to pick the exact bottom of a stock that's making new lows, all-time lows. Well, I don't know if it's all-time. Let me go to the monthly chart. Oh, no, it hasn't broken. Remember, I looked at this before, and I said 574 was the low back in December of 2008. Most importantly, what I was looking at a while back was if the low of 1632 was taken out, my biggest problem was there wasn't any left side support in the monthly chart. So I went to the weekly chart to get some kind of a sense of some technique that I could use. And I used a trend line. I was just talking about trend lines a moment ago. And I took the trend line from April of 2013 to the low of January of 2015. And that said that if it took out 13 support, that was a real problem. Well, it has taken it out. Now the stochastic's at 1.69. I don't think I have seen more than a few times where a weekly chart goes to a stochastic of 2% or 1%. In this case, 1.70. That is intense weakness. And it's the kind of weakness that says something is wrong with the stock, and that because there's something wrong with the stock, I would be very hesitant to say to you, other than a little nibble here at 10.12. Why 10.12? Because the last low was 9.88. It was on the 12th of August. The next low was at 9.96 on the 13th. The next low was 10.01, and today's low is 9.92, and it's running quite nicely off that low. The 120-minute chart is making another very flat base, and all I can say is, if you like the stock, regardless of what I'm looking at, which says that there's a real good chance a dividend's going to be cut, there's a real good chance that I don't know if it can be a bankrupt stock, but boy, it had better really quickly not go down to the 8 or 7 area, but push to the 12s, because if it goes down to 8, between 8 and 7, I don't see how it can have support. I don't know what's going to give it support. So all I'm saying is, if you're interested in trading it, and I'd only treat it as a trade, I would buy it at 10.12 a very small position. I treat it almost as an experiment. Why? Because what if this is the kicker, that out of the blue copper starts to rally, whatever it is, and this thing can break that gap down low of 11.06, the high of the 11th of August, then all of a sudden you're looking at a stock that's potentially making a cup, more like a bowl formation, an elongated cup. And that says, hey, great, now I can try to rally into the weekly to help that 1.7% in the stochastic to maybe get to 3%. If it can get to 3%, then you can see another 50 cents up in FCX. So what is my suggestion? Personally, I would wait for a rally, and then I'd wait for a test, and that next rally, if it succeeds in making new recovery highs, I'd be interested in buying it as a trade, Victor. So that's my suggestion, and all I can say is this is not a good-looking weekly chart. It is a horrible monthly chart. The daily is just starting to show a little bit of improvement. If you want to treat it as a trade, fine. Percentage-wise, all it needs to do is to go from 1060 to 1116, the next moving average resistance, and you've got yourself a trade that's given you 8 to 9%, maybe 10%, but it'll have to be a small position. So I hope that helped you, Victor. Thank you so much for calling. I appreciate it. And that was the other one. Oh, I think you had said, did you say BP? I forgot to write it down. Now, BP is the same sort of thing. This is the first time it's giving just a sense that it could try to rally. But really, it's more a bounce than anything else. If you do anything, I would do it really gently. I would not be getting carried away. And thanks for calling. Dow's down 10, S&P's down 0.52. Wow, let's have a look at that chart that I showed just a minute ago. This is a trader's heaven. Let's have a look at it. I've got it. There it is.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman. So just let me tell you a little bit about what I do for my personal. Let me put it this way: for what I do at TFNN, and that is I have the Tiger Technicians Hour at 11 o'clock till noon every day. And I have my own service, which is called the Opening Call. And in that, I show the Dow chart every single day, right here. If I can just get it. Is that it? Why is it not moving? Oops, cancel. Oh, that's what it was. Okay, there it is. So I give a synopsis of what we're looking at here, and then I add to it, and I explain exactly what we're looking at, why we're looking at it, and some of the technical aspects. Look, it made a left side, right to that midpoint there. To the right side took an extra day and it went down to 17,125. Our target was 17,034 from the 2nd of February. Now I suspect there's going to be another arch formation bounce, and that bounce says if it can close above 17,550s, we're at 17,450s right now, in the next 2 days or so, then there's a really good chance that we will make that arch formation, and you can test maybe the low 17,600 is a little difficult to say right now because we've got to see whether that MACD, the moving average convergence divergence, actually closes positive. Already the histogram, the little bars that show you that it's narrowing between the green line and the red line, that's a positive, and that's not yet in the plus column, but it is rising, and that's good. So that's what I do. It's one of the things, and then we go to if I can lift this up a little bit, I'll show you. Then I go to the overview. The overview shows the 120-minute chart of the Dow. It shows you the 120-minute chart of the VIX index, and went exactly to the level we're looking at. 16.27 was the level that we looked at on the 28th that it should try to retest, and it went to 16.28. And then it came down sharply. That's where you got the sharp market rally. After that sharp Wednesday decline and reversal, you've got the TRIN, short-term trading index. That's Richard Arms index. Yeah, you've got the daily chart just with the bars. It isn't candles, just the bars themselves. And you've got the S&P. And then I give it what we're looking at, which sectors are starting to look good, and what is not. I talk about my Dow Quartet index. And this is what I gave my subscribers over the weekend. I hope this is the one. Let me see. Nope. It was this one. Yes, it was that one. Okay, that was, I believe, yeah, that was my Dow analysis for this coming week. I show the daily, I show the weekly, and I show the monthly. And I go through each one in detail, and then I sum it up. So it's a very detailed report, plus, of course, the trades that we have, where we are still short the IBB. This is the, let me go through it. Here we go. This is the IBB. We're short at 393.10. The high was 400.79, the all-time high. So it's just off the top and, 2% off the top. And now it's trading at 366. And we use the inverted short position, the ETF, to also trade that, but we're out of that right now. We're only holding this one position, and that's the short. So it's been a big decline for the IBB, one of the biggest it's had since earlier this year. Not as big as the October. That was a 22% decline. When was that? That was October of last year. Oh, wait a minute. This is also pretty big. Yeah. And so I suspect that the IBB, there's that circle I've put in there for the next 2 weeks. And I suspect we'll be going down underneath 357s. Not just yet. There's got to be a little bit of a bounce. And that's what's happening now. So, and the semiconductor index, which has just been absolutely smashed, it was at 60.13 down to 50.49 right now. We've been short as well from up in the equivalent of about 58. We're using the SOX index, that's 300% short the semiconductor index, because this monthly chart, peak E in the Chapman wave and the weekly peak D, that suggests that this is time and price that we're looking at for the downside. So I don't see the semiconductors coming back anytime soon. A little bit of a bounce, yes, but I suspect that big rallies, no. But the downside might be a little bit curtailed until you get rid of some of this little bit of internal, I would call it, I can't even call it energy, just returnal, how can I put it? Sometimes you need a breather on the way down. This is a straight line move. And you remember, markets are made up either of a straight line move up or down, or an arch, or a cup formation. And the cup could be a V-shaped cup, or that's difficult, right? A V-shaped cup. It could be V-shaped, or it could be a semicircle. And on the other way around, you're looking at an arch or an inverted V. So at this particular point, you've almost got an inverted V in the weekly chart. You certainly have it in the monthly. You do have it in the weekly chart. All right, we'll be back, and the Dow is now down only 18, S&P is down $1.78. Be right back, and we'll start looking at some stocks. Basil Chapman sitting in for Tom O'Brien.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman, and we're looking. I just wanted to show this before we go to stocks. This is the TYX. This is the 30-year Treasury bond interest rate. It is also the 10-year T-note, and it is the 5-year T-note. And look, you've made that. You remember the chapter where we look for D's and E's or even F's, and then you expect some kind of a pullback. Well, we made an E at 32.55 on the weekly chart and a D in the 5-year, and look what happened. Sharp pullback. Bond yields are lower, bonds are higher, and this suggests that at 28.10, 2.8%, that yes, you could go a little bit lower. This is the area you might find some support. You could start to bounce around a little bit, but the trend so far remains down in yields. Look what's interesting about this, because I wanted to go to stocks. Before we go to stocks, I wanted to show you this chart right here, which is, this is the HGX. This is the Philadelphia Housing Sector Index, and it's in leg D in the weekly chart. They've made a cup and a handle and a breakout. The Wood, WOOD, iShares Global Timber and Forestry ETF is not. It's going lower and lower and lower, and this is like copper, suggesting that we need to be looking. We need to be looking at this very closely. So as you see, the housing stocks have benefited, and they've gone up proportionately as the weekly yield has come down. Now, the yield is not the 30-year. Usually, they use the 10-year has a great deal of influence, because that's what is being focused on, and that yield is down from the high of 24.89, 24.89, and at 24.89 made a little double, even a triple top, and you've pulled back, and now you're at that support level of 20.92. What was the low last week? 20.82. So this is going to be very interesting, because a break below that suggests that there is no support until you get all the way back down to 18.52. And this is the 10-year. My thinking is that the Fed on Wednesday, if they don't take the opportunity to raise rates, they won't have another opportunity. Once you get close to the political season, the Fed chair is really reluctant to do too many things. That's the history so far. It does happen, but it doesn't. It's rare. Now, what's even more important about it is that in this yield, what you're looking at, you see how close they're getting again. So I'm going to be watching this. It's important that we keep our eye on the yields. Very important. Why? Because you're in leg D in the housing sector, and D is where you've got to be careful. Yes, you went to E and F before, so let's take this moment, and we'll take this moment to look at Lennar, L-E-N. Lennar had a nice rally off the low that was made at 49.59 back on the 6th of August. Here's that. I always like to lift the trend line. I want you to challenge each level of resistance. And look, you hit that resistance in Lunar back at this is the Chapman wave reversal, 53.96, and a slightly lower low, the next bar, 53.87. Chapman wave 2-bar reversal on the 14th of July. And now look, you've got, I've moved it up from those trend line highs to this trend line high of the 31st of July, 53.41, and it comes in, and today we hit it exact to the penny, right there. But in the weekly chart, and this is one of the reasons why I'm a little upset, because for my subscribers, I really think I should have gone right back into a housing stock in that last pullback, for the simple reason that those yields are pulling back, and fund managers are going to be looking for what stocks represent the best value right at this time, given current conditions, that have held quite well and are closer to highs than lows. I think this is, I've summed it up there. And if you're looking at this, it says that Lunar should try, that's a leg E in the monthly, but that E can extend if that peak C in the weekly at 53.96 is taken out by 1 penny for a new leg D. So from 52.78 to 53.97, I think there's a nice little trade here on the very short term. And in fact, if the market holds up a little bit better, or if it's perceived that this sector is diversing itself from the general market malaise, then you can see this is A, B, there will be leg B, brand new leg B in the daily, and that'll suggest, hey, it could go to a D. All right, so I usually call this a gray A and a gray B, but in fact, it is, I'm going to make it gray there. It hasn't even gone above. I can't find it. Oh, there it is. Sometimes these letters disappear. Okay, so that's what we're looking at. And most importantly, it says support is at 52.83 right now. It says support is very strong between 51.92 and 51.70. I would actually like it not to go there on any pullback. I want this to keep moving, just in terms of chart itself. And Toll Brothers, TOL. This is also in leg B. It's a much stronger chart. Whoa, this is a very strong chart, very nice looking chart. I'm calling it an F at the moment in the monthly. I wonder if I can call it F/B, brand new leg B, but I won't get, let's see, it'll be a leg C, I believe. Let me just check, is that a peak? Your objective with the Chapman wave is to merely look for each higher peak and label them. That's 35.48, 35.46, so we call that a gray A. Why gray? Because it's at that point, it was still way underneath the previous high. Okay, so Toll Brothers, even better than Lunar. Isn't that interesting? Now, I have something that I've developed that I call the Dow Quartet. The Dow Quartet is merely, I've used these stocks for 20 years, I don't know, probably way more than 20 years. Oh, it's way more than 20 years. So GE is part of my Dow Quartet. Not bad. It's down 8 cents. It's a lousy looking chart, but on the day, it's not bad because it did. It's attempting to rally above the 9-period moving average. It's an improvement. So that's my market indicator, and say, hey, the market as well should come back, and that's exactly what it has. And now we're going to look at IBM, the next one on the list. IBM, horrible chart. Since a gap down, since that bad news, bad earnings, it's just unable to do anything. It's up 4 cents right now at 155.79. Oh, it could rally to 158 maybe, but weekly chart is terrible. Triple M is Minnesota Mining and Manufacturing. Larry had a wonderful question this morning. The question was, where is it located? Well, Minnesota Mining, okay? Good question. 147.71, down 57 cents, underneath the 9-period moving average. It was a leader for a long time. It's a fantastic company, multinational conglomerate, 3M company. Look at that monthly chart above the 9-period moving average. Just that one little October spike to the downside. It closes way above it, a new all-time high. Yep, a new all-time high, and it goes to a G/C, and then it goes to a D, and it pulls back at 170.5. And now what we're looking at is the MACD and stochastic are terrible. This is one of the reasons why I think we're going lower lows and lower highs. I'm just making it as simple as possible. This is a bear phase, bear market in the daily. It has just gone to a bear market in the weekly sell mode was intact for a long time. And I believe that in 2 weeks' time, you will see that the monthly chart has actually been upgraded from a sell signal to a sell mode. That's the way I'm looking at it right now. And then the final one, which is more my intermediate term indicator, is UTX, United Technologies, another great company, took out the low of October of last year, 97.30. We're trading at 98.40 at this particular point, but it did go down to 96.65 just 4 days ago. Oh, very ugly chart. This is not good news. That's all I can say. Let's look at the IYT. The IYT is, in fact, the let me just move this over here. This is the iShares, the transportation ETF. It matches the transportation index itself. It's a trading vehicle. And at this particular point, daily has gone from a sell signal to a sell mode. Weekly chart has been, this is the latest one. The weekly chart has been in the sell mode for a long time. And the monthly chart made a peak F. That's usually hazardous to your health and wealth if you are going to be long anything that in a monthly that's gone to a peak F. And look what's happened. The MACD and stochastic are very poor. So counter trend balance, I'll draw it in something like this. And then you got to be real careful. Okay, so that's your transportation index. Now, I wanted to grab this again just to show you that single leg A to the upside is one thing. It's a thing of beauty because it gives you a wealth of information that says, if I start to fail in a single leg move from a low to a high in one swoop without any other peaks along the way, the most important thing is if I make a 50%, this is whatever it is trading, makes a 50% retracement, especially a 60% retracement, that can be considered as a failure pattern. And within that failure pattern, what you can expect is that you will make lower highs and lower lows until some base a little bit above the original low is made, or you can even take out that low. However, if it starts to go sideways, it's a very positive thing and suggests that A could have another little mini A and then a B and a C, or it could just suddenly move to the upside, having made a peak A, and in fact, that would be a very positive thing. I suspect that that's what I'm looking at. I'm seeing that all the stocks that in my opening call, we have short positions, but we also had two long positions. We had ExxonMobil as a long and took a 1 point loss this morning, and there it is bouncing right back beautifully. I just didn't want to have that risk. A 1 point stop on on a $78 price is really very small, and it's come right back. So it's acting quite well. And the other one was we went long the Dow via one of the instruments, the ETFs that are multi to the upside, 200% or 300%, and just got stopped out of that, and now that's working beautifully. I don't mind, small positions, we take it, we do the analysis. It means the analysis was 100% correct, but the actual trade itself could have had a wider stop, or I could have waited to get in after the opening. I must admit that I don't have any news on, so I was a little surprised at the steepness of the decline at the open. I did expect some pullback, but nothing like what we got. And I would venture to state that was a little bit of an aberration, that there was something going on that was not necessarily, it was market related, obviously, if the price pulled back, but it wasn't as significant as what people think. Dow's up 1. S&P is unch. Wow, nice session we've got here. What is the E-mini? E-mini is going to leg B. Oh, lost it. Oh no, I lost it. Okay, there, up leg B. There it is. 1.25 move above starts the new leg. Remember, it moves in 25-cent increments. So there's your leg B. This is a very, very nice. We're going to have a nice session by the end of the day. And that's what I'm expecting. I'm just expecting a relief rally. That washout on Wednesday when the Dow went 350 or more points to the downside, and then it closed unch. That unch is extremely important. Oh, I had a very busy week. Sorry, I was away, and then I was doing whatever I could, and I was also trying to do the show and my daily call every single day. I was trying to find time for it. But over the weekend, I just had to take a break Saturday. Oh, take a break Saturday. Let me tell you something. Boston Symphony Orchestra. Wow, what a powerhouse. Played Beethoven Ninth. What an incredible piece. I for the third year in a row, we've been there for the rehearsal of the Symphony No. 9. Now, I personally thought the conductor last year was one of the famous conductors and did a fantastic job. I was not that happy, just my own personal opinion, of course, with the conductor this year, just in terms of from the rehearsal, that he did not go into certain areas that personally I would have liked to have gone into. But at the same time, what an incredible piece that is. Peace on Earth, Beethoven. Most aggressive personality. To be his friend was to be the test of all time of friendships, because he could just turn on you on a dime. And yet the passionate parts, I always have to laugh because Beethoven in Fidelio, one of his operas, you would think the melodies would just soar. It would be the most beautiful thing. It's a tough piece. And yet his symphonies create the melodies that he should have had in his operas. Those incredible lines, like in the Ninth, one of the most dramatic pieces of music. And the second movement has the most glorious phrases. They just stretch and they breathe and they're passionate. And what a composer for the centuries, for the absolute, I mean, I would not be surprised in 500 years' time, Ode to Joy and the Beethoven Ninth will be part of celebrations, always be part of celebrations. And that's the thing, Mr. Bull in the Den. He was deaf when he wrote it. When you say, big deal, he was deaf, I mean, he had a kind of a perfect pitch. He heard it all. That's not the point. I can tell you, I know so many composers, I know from composing myself, that when you actually hear the piece, even though you thought you had it in your ear just exactly right, it is different. It breathes. It does other things. The conductor has an interpretation. The musicians have interpretations. So it's more than that. The clarinet had just been invented in 1690-something. So Mozart heard clarinets for the first time when he was in Salzburg, I think it was, Mannheim. And he loved them. And he went back and he changed his pieces so that he could include clarinets. And then he met this wonderful clarinetist who he wrote all his clarinet concerto for the clarinet quintet. I was a clarinetist. My degree at the New England Conservatory of Music is clarinet. He added it so that when Beethoven was writing, they were still fresh. And he heard them perfectly. He wrote.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Hi, folks, we're back. Actually, we're talking about Beethoven. I thought, let's just take a moment here, because there's nothing that much that you can do. We've got a little upside action here. We're going to have to get rid of this relief rally, and we'll see what happens. So once upon a time, I was conducting this orchestra, and it was a Beethoven piece, and I stopped everybody, and I said, no, this is the part where Beethoven's walking in the forest, and the trees, the sun is filtered through the trees, and it was every afternoon he used to love taking a walk, and this is the quiet, peaceful part. And as I'm talking away, I hear from the back, do I play louder or softer? I thought that just clinched. It must have been a trumpet player. That summed it up. Do I buy or do I sell? We're looking at the XLF right now. The XLF in a little trading band. This is the S&P Select Financial Spider Fund. Holding okay, did nicely after that big spiral to the downside. Had a high of 25.62 back in July. Had a low of 24.60. No big deal, $1.25, what, 5% or something. And then it pushes back up. Now, my suspicion is I don't think the bank stocks at this particular moment are really ready to be bought. I think they have to come down a little bit more. But this is the sector that I would not be surprised is the first one to spring back in the next phase. And the monthly chart looks just terrific. The technicals are not, but the monthly price is above the 9-period moving average. And you've got the weekly chart, just a high-level consolidation so far. So maybe one will miss that whole opportunity. I'm not sure. There's a position where I haven't done that for subscribers on my opening call. I've thought about it. Maybe in this particular rally, this is a time to actually do it. But to nibble on a couple of the bank stocks and just hold them and say, you know what, they can go down 10%, 15%. I want to start a position because there's a chance that at any point, if we're wrong and this market does not come back, in fact, they could be leaders. But at this point, I'm looking at the charts. I'm looking at, look, JP Morgan, there we go, JP Morgan. Yeah, coming off the bottom, I've got a peak F. Everything about it looks more like a peak F than a B in the weekly chart. I'm just going to hold off. I'm going to have a little patience. I need to see where we can come back to land. And that's JP Morgan. Let's look at Bank of America, BAC. This is just a digestive phase. And I'm prepared to wait. WFC, Wells Fargo, terrific I never did understand what happened with that last peak B there. I've tried counting it a myriad number of ways, and I still get that B. It's very unusual to go to a recovery high at a B and then not a D, E, F, but a B. And the weekly chart is at a D, and that gets precedence. And that says, be careful, a close under the 9-period moving average of 57, exactly where we are, 57.20 right now. A close underneath that on Friday would be a negative. So let's see where this rally takes us and what it takes us. Let's look at the some of the big cap stocks. You've got Amazon just stuck. It's up 56 cents. 0.11% at 532. You've got peak D in the weekly chart. You've got a G/C. That's still very positive in the monthly. So we're going to be watching this closely. I just don't think it's anything worth in a trade right now. If you're looking at it, let's look at Google. Google, have I got this notated fully? Google, what was the other one? The D, Google L. Google L? Yeah, Google L. Yeah, high-level consolidation, not really going anywhere at this particular point, not a short, not a long, just needs to resolve the next few days. Then we'll get a better directional focus. Price line, PCLN. That's going to be very interesting. Price line is up 14 at 1,298. And it's made a peak C. There's no other way I can count it in the weekly. It suggests it should go to a D. Does it do a D in this phase, or does it pull back and then come smartly back? This is going to be a very interesting week because we're going to see a lot of evidence about where we go in the next 2-3 weeks. I'll be back, Basil Chapman. Oh, this is it. That's the end of the show. I'll be back straight off this to do my own show. Thank you for being here, Star.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.